When PayPal reported their earnings just 3 days ago, there was one thing that you should have seen that would have screamed to you, yelled to you, told you not to buy PayPal stock. What is that one thing, and how can you learn this one very simple indicator to not buy stocks like PayPal? How can you use that in the rest of your investments to avoid buying the dip on stocks that just simply should not be bought? What is going on, investors? Hopefully, you guys are doing well out there. Time to talk about PayPal Holdings, ticker symbol PYPL. Over the last year, down 35%, year to date, down 16%. From the peaks of the 2021 euphoria around this stock, shares of PayPal down nearly 80%. I am sure you have tuned in to a number of videos here on YouTube telling you it's time to buy PayPal. It's time to buy the dip. I bet if you go down into their history, they probably told you to buy the dip a number of different times as the shares of PayPal declined 80% over the past 2 years. The company reported their Q2 revenue. Revenue was up 7.4%. That might be a reason to buy the stock, but there is a reason not to buy that stock. I'll show that to you here in a moment. Revenue coming in at $7.3 billion. They even beat expectations. Even the full year guidance coming in over where the company was a year ago. If you start looking forward from a revenue perspective, company is expected to grow in the high single digits as it pertains to revenue growth. When we come over here to the financials, they actually look pretty darn good. Net revenues from $6.8 billion last year up to nearly $7.3 billion. The company also has done a nice job keeping operating expenses in check, up from just $6 billion up to, we'll call that $6.2 billion. That led to higher operating income from $764 million all the way up to $1.1 billion. After the company pays income taxes and other expenses, they earned over $1 billion in net income. Last year, on a quarterly basis, they lost $341 million. Many of you are wondering why and what is the reason not to buy PayPal stock. It is very simple. It's not the fact that the shares are down 80%. Folks, many stocks have gone down on that type of drawdown. The number one reason and the only reason to not buy PayPal stock right now should be hitting you square in the face right now. It should be absolutely obvious. And if it's not obvious to you, then you have learned something today, and you need to apply what you're about to learn about PayPal's stock chart to every other stock chart that you look at when you're trying to, quote, buy the dip or step in on a stock that is down this much. PayPal stock right now, as you can see, is making lower highs. That means as this stock peaks up from its downtrend, the next grouping of highs doesn't outpass the previous group of highs. You are also making lower lows. It means buyers are stepping in at a much lower level than the previous level. Folks, this is a long-winded way to say that PayPal stock is in a downtrend. Not only is it been in a downtrend since October of 2021, it has been in a very well-defined downtrend since April of 2022. Folks, you have to, and I repeat, you have to wait until PayPal breaks out of this trend. What does it look like? Here's Visa, folks. Visa stock, ticker symbol V. Many of you probably can look at this chart right here of PayPal and then look at this chart right here of Visa and say, well, this is the same chart, folks. You are making lower highs. You are making lower lows. Well, the difference is, look at Visa. We start to zoom out. What happened with Visa? It finally broke out, started making higher lows. It started making higher highs. That, folks, right there is an uptrend. You buy the dip in an uptrend. You do not, I repeat, you do not buy the dip in a downtrend. Now, some of you are saying, well, I watch XYZ guy on YouTube and he's saying that this is the bottom in PayPal. Absolutely nobody in the world knows when PayPal stock has absolutely bottomed. But everybody in the world can identify when a stock has broken out of a downtrend. It is when you make a cluster of highs higher than the previous cluster. That is when you step in on PayPal. Right now, it appears to me PayPal is heading to make a new lower low, lower than the lows that we made back here. That means shares of PayPal going down south of $50. Please, folks, please wait until this stock breaks this trend, breaks above the $75 to $80 level, closes there, confirms that our downtrend is over, and then we are starting to make a new uptrend. That is what you have to wait for, not only with PayPal stock, but with any stock that you are looking at. It's not about picking tops and bottoms. It's not about timing the market like a wizard. It's about identifying the trend. When a stock is in a downtrend, you avoid it. When it goes in an uptrend, you're buying the dip. It's as simple as that. PayPal stock, I would avoid it with all my might until we get a close above the previous set of highs, which right now is about $75 per share. Shares of PayPal will likely continue to go lower because that is where the price trend is indicating it will go. Hopefully you guys enjoyed today's very quick video. We'll be back again soon with more. Good luck with your investments.